This is Eat, Sleep, Invest, the marketing podcast for real estate investors to get more deals. Hey, welcome back, everyone, to another episode of Eat, Sleep, and Invest. I'm your host, Bryan Driscoll, and I'm here with Michael Bull. What's going on, Michael?
Hey, Bryan, good to be on your show.
Hey, thanks for coming, man. This will be pretty interesting. Michael has a ton of experience in the commercial space. Michael, why don't you give a little bit of your background?
Okay, well, I've been in commercial real estate for 35 years, and I've had a company I own, Bull Realty, for 25 years, doing commercial brokerage work. I started selling apartments when my first deal was 19 years old. I sold a 20-unit apartment building. And then used to own a property management company when I was young that managed apartments and shopping centers. And so now I lead a team that sells office buildings all around the country. And then I lead Bull Realty that works in the Southeast, selling all types of properties. We have teams in every specialty, every sector.
Yeah, now this is cool too, because I primarily invest. I do a lot of the Burr method. I buy single families and rent them. And a lot of the listeners do that too. What do you see whenever people are transitioning? Because everyone wants, or a lot of people, I would say, would like to get into commercial multis, but it's a whole different animal. Like, what do you see that investors can do, or what kind of tips do you have there?
Well, I think it's a good transition to go into multifamily because there's certainly some economies of scale, right? You have your tenants in one place, there's one roof, one property. If you get a big enough property, when I used to own the management company, when I had individual owners that owned individual units, it was always tough to call them when a vacancy was coming up and say, all right, send us some money. You're going to need money to pay in your account to pay all the bills and to turnkey and all that, secure the property. But if they had multifamily, I was never calling them to get checks because the other tenants, right, were cash flowing the property. So I think multifamily is a great thing to get into, and just start looking at what you can afford and how you can finance it. And if you have investors, and start learning the market, learning the brokers that are active in that market, and and start learning as much as you can about values and rents and markets and what's impacting the particular market you're interested in.
Yeah. Now, so you bring up brokers too, because that's the one thing I see here in Pittsburgh. It's like, okay, if I want to get involved with multifamilies, see, I do my own marketing for singles. I can get a hold of the sellers. With multis, that's a whole different audience. So you're dealing with a lot of brokers, relationships, things like that. It's a lot different, right?
Yeah, most sellers of apartments are going to use a broker when they're ready to move them, and for the benefits of that process. So you want to be able to work with brokers and know how to work with them, both when something's on the market and you're making an offer and there's competing offers, and also how to potentially get a broker to bring you off market opportunities.
Yeah. Now, on the commercial side, there's a lot of, same as the residential side, different types of agents, right? What should somebody be looking for on a commercial, like a broker that's actually like?
And commercial brokers, when you're looking for a broker to work with, I look for one that works in the property type. Most commercial brokers, at least in larger markets, are specialized in their sector. So an apartment broker may be only doing apartments, and if that's what you're looking for, then that's who you want to hook up with, right? And to try to get them to bring you opportunities, one, I just show them that you have the equity, that you have the ability to close, you have the debt lined up, and that you're tracking the comps in the market, and that you will move on properties quickly. And if they bring you something off market, it's also important to let them know that, hey, if you're gracious enough to do that for me as a buyer, to bring me something off market, then I'll protect your reasonable fee and make sure you get paid. And also keep the opportunity very quiet and confidential, and won't mention it to anyone. So if it turns out it's not a match for me, it won't be blabbed out there that it's available.
Okay, those are some good points. So say I hit you up. Say you didn't know me, Michael, and I hit you up. I'm like, hey, Michael, I'm trying to buy multifamily. Like, what are the seasoned brokers looking at in terms of buyers too, to make sure they're not being tire kickers and things like that? Like, how do you vet people?
So it depends on the cycle and where it is. And, the cycle we've been in is a real seller's market, right? So there's a lot of multifamily buyers in the marketplace. So a apartment broker may just kind of look at what are you looking for, price range, size range, you're looking for value add or core, and what price ranges, how do you fund the deals, what have you done so far, and then put you in their database so that when they bring something to market, they can bring it to you if it fits your criteria. And then if that's mainly what a good, successful apartment broker would do with you as a buyer. And if they have current properties on the market that fit you, present them to you then.
Yeah. How do you get to be at the top of the list, though?
I used to get asked that a lot when I sold apartments, and a couple ways is adding to what I've already mentioned is use them for selling your properties. Right, a commercial broker may tend to put somebody more at the top of the list when that buyer is using them to sell their properties. Also, sometimes I'll have had buyers that will. Here's my alarm to be on your show. Sometimes they will. Buyers will want to be on the top of the list, right? So they'll ask they'll bring you in on a deal. So buyers will know of a property. Like I just had one recently. It was about $8 million. It was listed with a broker. And the buyer was interested in it. He called me to represent him and to compensate me separately to help him negotiate finance, get it under control, get it under LOI, get it under PSA, get the deliverables from the seller, and make the deal happen. So when you bring a broker in like that it's actually going to add value and help you get it done, then obviously you're building a relationship there, and that broker may be more inclined to bring you off-market opportunities. If they even do that. And some brokers don't want to work on off market. Some buyers don't. But there's certainly some, we closed a deal last year that was $105 million. It was off market, on $105 million price range. So there's certainly off market deals getting done.
Yeah. And off market. Yeah, I guess you're right. Yeah. Some people are interested in off market. Some people aren't, Mm-hmm. Yeah, it's interesting on a relationship, because I always look at that with the commercial. Like, it's tough getting into that space because you figure a lot of people look at a seasoned commercial broker or someone dealing with that. It's like, what are they going to deal with me for? They don't even know me, and they already have a whole client list. So I'm just going to talk with them, and I'm just a new guy. So I'm going to get bottom choice. Like, I'm not going to get into tips,
Yeah, but everyone has to start somewhere, right? And that's true. So maybe you start off with smaller properties or smaller brokers who aren't doing as many deals, and also maybe invest with partners who do have a track record, right? Come in as a limited partner with a general partner and start getting some experience and deal experience. So, if you invest with a general partner in some deals, 2 or 3 deals, well, now you're starting to get a track record. So if you're calling a broker on your own, you can, point to those deals.
Now, how about getting offers accepted? Because it's one thing to get to find out about a deal and want to purchase it. Like, getting them accepted, that's where your expertise comes in, right?
Yeah, it does. And one of the things is, sometimes I've had brokers use me because that gave them power, right? They said, well, if the buyer's working with Michael Bull wouldn't be wasting his time if they weren't real and capable and properly managed expectations wise. So getting with a broker to represent you that has clout in the market is one way. But if you've got a deal where it's on the market and there's multiple offers and you're trying to get a seller or broker to pick you, one is to have them understand that you know the market, that you know the property, that you know enough about the underwriting in the market and the capital expenditures that may need to be done, that you aren't going to retrade, you're not going to cancel, as much power as you can to let them know that you have the equity, that you have the debt. If there's any approvals needed by investors, be honest with them, obviously, but just show as much strength as you can. Another thing that some buyers have been successful with is offering very large earnest money amounts, so that sometimes you read in books, oh, the lowest earnest money possible. Well, in commercial real estate, the seller may discount you immediately, and I've had seen sellers with multiple offers pick buyers with lower offers but higher earnest money, because the seller just made the seller feel more comfortable. And if you have a really good contract with a really safe escrow agent, then it's a really cheap way to have some power with the seller, is to have a strong earnest money amount. And then, of course, just have as quick and clean a deal as you can get done. Another thing we've seen is people, instead of doing a 60 days complete full due diligence contingency for everything, they may do a 14-day inspection due diligence on the physical, and then have more like a 45 days to get loan approval and closing. And they separate those. I guess that's done a lot more in residential. And in commercial, a lot of times it's just all bulked together. Just earnest money, quick and clean, show them that you're ready to close. That the brokers and sellers want surety of close, right? We've got a deal right now that's about $37 million, $39 million. We've got multiple offers. We pick the top three for a best and final round. And we're doing this morning, and we're looking at the offers and the earnest money and the pricing and timetables and contingencies. And we concentrate first on surety of close, who we feel most confident is actually going to close. And then we try to work with that buyer first.
Yeah, it makes sense too, because just because an offer is high doesn't mean it's going to make it to the closing table. Or
make it at that price.
Right. Yeah.
Yeah.
Which brings something else up. I heard you talking somewhere else about even buyers can get reputations too. Say, making changes at the last day on their contingency period, things like that. Like, how important is it to not be doing those types of things, or what types of things should people be avoiding there also? Yeah,
that's a good question. And in commercial real estate, the track record of the buyers is tracked really, really well. Like, we've got a buyer right now buying a shopping center in Tennessee, and we're going to make sure all of our agents know the track record of this buyer to never get involved with him ever again. He's just been a nightmare. And we're going to make sure everyone knows that here, and that none of our seller clients ever work with them. And so a lot of buyers in commercial properties are proud of their track record. They'll tell you, hey, the last 10 deals we've closed in the last 10 years, we didn't retrade any of them. And then and here's the broker's contact that you can confirm, that if we put together an LOI at $39 million with, the timeframes we have, unless something comes up that the seller or the broker didn't tell us that's major, we'll close this, and we'll close it on time at this number. So it's, the track record. And that's one of the values a commercial broker really adds to commercial sellers, and why we specialize on larger properties. We tend to specialize in our sector. Like, I lead a team that sells office buildings, and we have a vertical on government and buildings leased by the government. And so, we know all the buyers and owners in the space. So, and we track them and know, their method of operation and how they are to work with. So when we take something to the market, that's part of the value we have to our sellers, is we know how these buyers work. We know who, if they write an LOI, it's good as gold, it's going to close. And who writes an LOI, like, there's no way they'll close at that number.
Yeah, that's good stuff to know. What do you think? Little different topic. What do you think? Because you're saying like in the one case dealing with office buildings. What do you see in this market happen with offices? A lot of people working from home. How's that affecting the market there?
Well, the commercial real estate market is really interesting right now. And look at some really strong sectors like multifamily, industrial, really strong, medical office strong, government office strong, retail surprisingly very strong, self-storage strong, senior housing strong. And office is the sector that's kind of most in question with folks. And I think there is a window here of opportunity for buyers to invest in office, because I think the prices are lower right now. It reminds me of the housing boom, or bust that we had and in the Great Recession. I don't know why it was called great. I didn't think it was that great, but and prices of homes went way down, and then they just continually went up for years. I think we're going to see the same thing in office, because there's a lot of people that think that work from home is the holy grail, and that's the future of a lot of employees. And I think that's going to change, and I could give you the reasons, but I think that's starting to change and will change. And when the employment market changes, when employers can tell their employees, hey, get back to the office and work, or what Elon Musk said, get back to your office and work, or go pretend you're working somewhere else. So I think when the challenges come to fruition for these companies, with the challenges of work from anywhere and work from home, they're going to want people working together, and all the benefits to the folks' careers and to the company as a whole. And they're going to want them. So it's a good time to buy office if you have a company and you can use space. It's a good time to look at your leases and try to get better space, or to buy buildings, because your business can plug up vacancy, right, and immediately create value. So I think office is a good buy in the right markets right now, especially single story office, suburban office, the prop office that's in the most concern to buyers and folks right now are high rises, where there's a lot of people going through the lobby and the elevators and things like that. But even those will come back, and so it's a buying opportunity. I think might last for a year, could last longer. When the employment market changes, it'll start strengthening back up.
Yeah. Do you see anyone buying like the high rises, things like that too, and like converting some of them to different occupancy, like multis, things like that? Or do you think they're going to stick with offices, and then the economy is just going to change to bring people back to office?
Yeah, commercial properties have a useful life that when appraisers appraise them, they have to put a useful life on them. And, you will see, and we are seeing some older office buildings being converted to other uses, to mixed use, to hotel, to multifamily mainly. So yeah, we are seeing some of that. So some older office properties will get converted or torn down, and the properties used for other uses.
Yeah, I was talking with one of my buddies. Commercial is interesting to me. Like, say a single family property, your appraisal in your market pretty much dictates the price. Commercial, the price is dictated by multiple factors, though, right? Like how much the rent is, things like that. Versus, like, you can just buy a property and make a few changes, and the property's not worth more, right?
Absolutely, absolutely. You have the three approaches: the comps approach, the income approach, and the replacement approach. And the income approach becomes very, very important in commercial real estate, because they're basically income properties, right? So like we're selling a property now that's a non-cap on existing income, but it has 125,000 square feet of vacant space. You're basically getting for free, right? So you come in and lease half of that or all of that, and you've substantially increased the value of the property. And that's an office property in a very, very strong market that just hasn't been leased that well. So you can really create some good value in office properties by buying something that needs some lease up and leasing it up.
Yeah. What are you seeing, like with newer guys getting into the space, trying to go to commercial? What are some of the big mistakes you're seeing?
I think some of the mistakes I just see investors make in general, whether they're new or not, is sometimes concentrating too closely on the absolute current market, right? Let's say to give an example, you're looking at single tenant net lease investment properties, right? A Walgreens, CVS, a drugstore, a quick service restaurant, auto related single tenant properties with high credit tenants. And the cap rates on those properties, depending on the lease terms, are very steady in a market. And if you're going in and say cap rates are 6.5 on a 10 to 15 year lease, and this cap rate is a little too high at 6.7, and you don't buy it, you're kind of looking at a very tight time frame of valuation curves and not look at the long term of that property and ownership. I've got a lot of properties, not a lot. I've got properties that I've owned for a long time, right? And if I'd overpaid by each of those by $500,000 almost, it wouldn't matter now. They were just great returns and great properties. So I think just looking too tight, look at a good location and good tenants, but look more long term and don't miss an opportunity because you're of a small amount of money, if you will.
That's such a good point too, because people are looking at cap rates, things like that at today's value. Mm-hmm. But if you're going to own this thing, properties go up.
Yeah. I mean, I bought an office building many years ago, and I had 3 buyers looking for that type of property at the time. And they all 3 passed, and I bought it. And, it's worth substantially more, than it was at that time. So it's just, all right. So these guys passed because they thought it was a little too high at the time, but it was a great property.
Yeah. It's funny when you look back too, because it doesn't seem like a deal really when you're buying them.
Right.
Back, it's like, oh boy, that was really smart.
Yeah. And, we're in rampant inflation. And we have a volatile market in some cases and sometimes that we've experienced lately, and I think real estate is a good hedge against inflation and something that's solid for a long term. So I think if you've got money that your feels too volatile in some investments, I think real estate's a safe place to put it. And commercial real estate just has less hands-on type of involvement, right? Your cap rates will include professional property management. So you're not having to deal with tenants and toilets. It's handled by professionals.
Right. And most of them are triple net leases too. Can you explain that for anyone who doesn't know what the difference of just like a normal lease versus triple net is?
Yeah. And that's a good first commercial investment, especially for people who are just very, very busy and don't want to take the time to, maybe they want to trade out of some single family homes because of the management and turnover. And they'll do a 1031 exchange into single tenant net lease properties that are triple net lease. So, if you look at your McDonald's, your Starbucks, your CVS, the freestanding single tenant buildings that are located usually on out parcels or main streets, they're usually long-term leased by very high credit companies. And they're triple net, meaning the tenant is paying taxes, insurance, and maintenance on the property, not the landlord. So it's mailbox money. You're just sitting back and getting a check. And there are no really operating expenses or anything to operate. In fact, you can't operate. The tenant controls the property, and you don't have anything to do. If they ever call you to fix something, you just say no, and they say okay, because they're not going to ask you anyway, typically. So those can be great first time investments. They tend to be lower cap rates because they have very low vacancy, very low distress. There's the tenants just are strong and high credit. The dollar stores, all those types of tenants. You might see cap rates from, depending on the city and the market, 4 to 7%. And some of them are even flat leases, like the drugstores. There's no escalations during that time frame, so they're very conservative investments. But then you tend to get into some of them that like dollar stores and quick service restaurants, and they will have some rental escalations during the term. So those are good first time investments that don't require you to do anything. Now, when the only thing you can get into there is when the lease does come up, you have a very professional tenant who negotiates leases for a living and studies it and is paid bonuses on how well they renegotiate with you as a landlord on a renewal. So I would suggest if you're a mom and pop, if you will, investor, you don't own hundreds of properties. When that national credit tenant starts to try to negotiate a lease with you, bring in a professional, like us or someone like us that can represent you on that negotiation. And if I told you some stories, it's just kind of crazy what some of those tenants will try to strong arm, individual owners and scare them about leaving when they weren't going to leave anyway. So, and when we have ways to figure that out and negotiate from a position of power.
Yeah, and that's a good point you bring up there too, because like I would never think to pull someone like you in for just a lease negotiating. I always think brokers, if I want to buy a property, sell a property, but yeah, even things like that could be big dollars. And you're right. You're dealing with professional negotiators.
Yeah, you are. And just little changes in the lease can really change the value. We had a single tenant medical office owner call us a few years ago to sell his building, and he had just renewed the lease, and he had included or agreed to a clause in this lease renewal that cut the value of the building about $2 million. And he didn't realize it when he was negotiating the lease, how detrimental that was. And we asked him, so look, why didn't you call us? And he said what you just mentioned. He said, I didn't have you guys engaged at the time, so I didn't think about it. And I said, wow, just call us. If you know you're going to use us anyway to sell the building, the lease is what powers the value of the property. Do call us, do run it by us. You don't have to always write us a check to have us help you.
Yeah, it's so important. Like anyone listening, make these partnerships. So Michael, you're down in Atlanta, right?
Right.
So like if anyone wanted to partner up with you and work with you, speaking of partnerships, like what areas can you help people?
It depends. So, I own Bull Realty. So we have about 50 people. I'm licensed in 9 Southeast states as a broker. And with brokers of record, we tend to do some things all around the country. I just sold an office building in California. I've got one under contract in Connecticut. We've got portfolio under contract that's properties around the country. We have 2 portfolios in Tennessee. We have a building for sale in Macon, and that's just my little office team. So, if they want to do single tenant net lease investment properties, we have a real expert there. And with brokers of record, she works all over the country, Nancy Miller. If they're doing senior housing, we got 2 real experts in senior housing. If they want medical office, larger medical office, we have a broker that focuses on those. If they want smaller medical office in Atlanta or Southeast, we have a broker who works on those. And then we have multifamily brokers who mostly work in the Southeast U.S. We have land brokers. That's all they do. So our folks are very specialized. So if somebody needs something, we can see if we're not the right match to help them, we can get them in touch with the folks who are good to help them, because we're all very specialized and we add a lot of value in our specialty. If it's not our specialty, it doesn't make sense for us to work on it. And we'll get folks to the right match.
Yeah, I like how you're so specialized. You have different people that specialize in each area too, because that's important. Like buying land is different than an apartment building or a medical office.
Yeah, it is, and it's important that if you haven't bought, 6 properties at least of a property type, to engage a broker, even in something that seems as straightforward as a single tenant net lease investment market. I'd urge you to get a very experienced net lease broker helping you, like Nancy Miller, because there's the devil's in the details.
Yeah. What are some tips you have for agents? Because you deal with other agents too, like selling properties and things like that.
Yeah. So for commercial agents, I think, one of the challenges that some of them have is not getting enough training. It's very hard to find training as a commercial agent. There's a lot of training for residential, but commercial there's not, and the license is the same as a residential. So you don't learn anything about commercial real estate getting a real estate license. So you have to really go train. If maybe that's a real estate degree at a major college. If not that, then there's training companies like commercialagentsuccess.com, which is a video training company I have at virtual videos. You have ccim.com that has 4 one-week core classes. So if someone wants to be a commercial agent or they are a commercial agent, we recommend a lot of sales training and then training. Watch the 21 videos at commercialagentsuccess.com and get involved with all the ccim.com training that you can, because it's a very specialized and competitive marketplace. And then if you can focus on a property type or a geographic area, if you're in a small market, but if you can focus on a property type and then get the right training and the sales training and the other training I just mentioned, you have a chance to be competitive as a commercial agent.
Yeah. And it sounds like with being a commercial agent too, it's like kind of like anything, like the jack of all trades will do some stuff, but if you specialize in a specific type of property or niche, you can kind of crush it and become
Good point. I mean, if you live in Key West, you can't focus on high-rise office buildings, right? You got to do everything. If you, and like here in Atlanta, we have the Atlanta airport. We can almost fly anywhere in the country and any day we want and fly back after a meeting. So it's convenient for us to do things if they're large enough anywhere in the country. So we can very much focus in a property type so that we add tremendous value. We know where the bumps and bruises could come in, right? We know what to watch out for. And so it does add tremendous efficiency and tremendous benefit to the buyers and sellers and tenants and landlords that we work with.
Yeah, I'm with you too. I'm a big fan of not getting punched in the face as much and partnering up with people that we can deal with their experiences,
That's right. Somebody's already been beat up, right?
Right. Yeah.
Yeah.
That's cool. Hey, well, Michael, if anyone wants to reach out to you, like what's the best way for them to get in touch?
Through my websites, bullrealty.com, has my contact information. That's my brokerage firm. My training company is commercialagentsuccess.com, and my contacts information there if they want a licensed video training for commercial agents. And then my show, America's Commercial Real Estate Show, my contact information is that website too. That website is CREshow.com. Okay.
And you said you've been doing that show for 12 years, right?
Yeah, I've done show every week for 12 years. At one point, it was on 60 radio stations around the country. It is the biggest show on commercial real estate in the U.S.
That's nice. Hey, anyone listening, go check that out. That's a long time for a show, especially consistency.
Yeah, and I've been in this business 35 years. I've closed probably $7 billion in sales, and I learn from listening to that show, doing that show and interviewing the folks I interview. It's incredible. It's not people on there shopping their wares. It's like this show you just did today. It's just adding a lot of value to the listeners.
Yeah, it's great. Hey, well, Michael, we appreciate you coming on. I want to tell you thank you.
Well, I'm glad to do it, Bryan. Thanks for having me.
Yeah, cool, man. Hey, and everyone listening, check out Michael's websites. If you're interested in, if you have anything, just reach out to him. And then in the meantime, go out there, crush it, and close some deals. Hey, well, thanks, Michael.
Thank you.